It's a pleasure on my side to welcome today Martin Tixier, who is a good friend of mine and been quite in contact for a while. Also, to talk about financial markets, we will touch a couple of topics. I know Martin actually from our common time as part of the OM independent research network. So, but we are quite in close contact. So, Martin has a great assessment of the geopolitical side of the world on the economy, uh, and he can introduce himself afterwards. But he had also a good grasp of some investment ideas. I remember there were some good calls over the last 5 years. We didn't know each other. One was like also Alibaba, for example. There was also uranium, where you were quite early on before the whole crowd jumped on that trade. So it's a pleasure to talk with you on different topics today. What I would ask you first, Martin, to introduce yourself. What is a bit share your background, which is quite extensive, and also can characterize yourself. How would you characterize yourself? So your current profile now.
Absolutely. So, yes, I've been working in financial markets for a very long time, and I got totally hooked and passionate about macroeconomics, financial markets. I've worked in London for many years. One of my last role in a trading room was credit sales, flow credit sales. So I was dealing to credit derivatives, investment grade bonds, high yield, a little bit of asset-backed securities. And then I moved towards from the sell side to the buy side. I spent a couple of years in working for a large asset manager in Europe, dealing into marketing for fixed income funds, covering money markets, but as well emerging market debt funds, corporate bonds funds, inflation linkers, the whole spectrum of fixed income funds. And after that, I relocated from Brussels, where was my last role with this asset manager, towards Paris, and I've been working as an independent since 2016. I'm still passionate about market. I started working and writing about financial markets in 2009, first on Blogger, and I decided to switch early on in 2022 to Substack, and I found it's a very, very powerful means of publishing, and I've been publishing on a regular basis on Substack ever since. And I'm still passionate about markets. So I look at long-term trends. I'm a value investor at heart, as well as contrarian. Hence my contrarian plays on uranium. When people hate, for example, a specific asset class, it gets me more interested. The very good example was when we were discussing, when I was working alongside you at Home Research as independent researcher in December 2020. I remember recommending our clients buying coal plays such as Peabody or Alliance Resource Limited Partners. They were trading at $5, which was totally stupid at the time because everyone
Where are they now? So
I think they're in the region of, let me tell you exactly where they're trading at. Just rapidly, I will tell you. BTU is trading at $34, and Alliance Resource Limited was trading at $25, $26. Yeah, December 20.
It's amazing the way they come through already, and this it doesn't seem still to be the end of the
No, absolutely
party.
not. And I think there was a massive pullback. In fact, last summer there was a deal that fell through regarding Peabody, and Peabody was trading at a stupid price because of the fact that they should have used a lot of cash proceeds to proceed with the acquisition.
Mm-hmm.
But there was a MAC close that was triggered. So in the space of like 6 months, the stock rebounded by around like 120, 130%. And when I saw that the MAC close was being requested by Peabody, I said, okay, guys, I think they're going to win that once. I mean, you can jump on the boat at that stage. So yes, I am a contrarian at play. I play tactical as well, but I prefer to play long-term views because I'm not a day trader. I prefer to do like investment recommendations rather than trading recommendations.
No,
Uh,
absolutely. Those guys who are following your Substack, and I'm also having the honor to be like have a premium access to your great research, and we are at the heart. We are bit also same. So in times of our thinking, as we realized over the recent year, and it's really the consistency and the long term. I know some of your statements you made also on the geopolitical side, which can come true. It has been consistent over the recent years. But I would like first, now we already dropped into some topics, but first I would like to zoom out. And what I like when I read your research, and I also find it amazing, is all the you come up with some teasers, which is very sometimes of the literature, sometimes of history. So in your recent post, you wrote about civilized money, which we also take here as a title for our interview. And actually, you are quoting Charles Howell from 1895.
yes, absolutely.
How you come up with such ideas? It's amazing. What all this was. I'm just in my research. I come up with Star Wars analogies with Jabba the Hutt or so. But on your side is intellectually much more depth. I have to say, and I'm
It's
always
it's 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 the hardest part of the exercise of writing is coming up with these analogies, because it's really has become the signature, the trademark of my Substack, because I want to use these analogies. Can be historical, as you say, it can be
Mhm.
scientific, it can be linked to literature, to art, to music, to many different topics, because uh, by doing it is also on my side, I'm learning a lot about doing it, and I want as well to share and do some analogies, because if I just take the historical analogies, which I did with, as you mentioned, Charles Orwell. I did before, when I talked about the period of the U.S. Civil War, when I talked about the period of the European revolutions, which followed the French one in 1848, which was called the Springtime of Nations.
Mhm.
Because I think we need to go back and forth uh, in the time I study history, because the same tricks, the same con tricks that were used by the likes of Ponzi, the likes of Bernard Madoff, by the likes we saw during the 2007 crisis. They go away for a while, but they always tend to return when we come at the end of a credit cycle, for example. Now, everyone is talking about what's happening in private credit, where you see like big dislocations, where you see like binary outcomes from the like of First Brand, who was a subprime lender, and
Mhm.
you had like big credit players who are really known for their acumen in playing credit, such as the likes of Apollo, Blackstone, and these guys were taken to the cleaners because some of the collateral was pledged like 2, 3, 4 times.
Mhm.
So something which was supposed to be like bulletproof, such as like senior loan with a lot of covenants, just basically the value went from par from 100 to zero just immediately. So the binary outcome was shocking. But people tend to forget, looking at the credit cycle, tend to not look at the classical economists, such as Orwell, but there's more others as well, with which I've been introduced to, thanks to my friend Geoffrey Fouvry, which I've quoted on numerous occasions in my
Mhm.
Substack,
Absolutely, I remember. Yeah.
who's a very, very big student of classical economics, such as Tuck, such as Wicksell, such as Kemmerer. But as well, we're both fans of Jacques Rueff, hence the use and the tongue in cheek of using civilized money, because a lot of Keynesians, they use the term barbaric relic when they talk about gold.
Mhm.
Uh, so that's why I use this reference, this title, civilized money, when we're trying to compare the profile in terms of risk about between gold and Bitcoin, because there are two camps. A lot of people believe that Bitcoin is the new digital gold, from me from just an agnostic and as well quantitative approach. The profile is much more similar to growth stock than to something which is substantive, like a scarcity play like gold.
Mm-hmm.
It's more akin to, I would say, a Veblen good
Mm-hmm.
than a scarcity play.
Yeah, can you a bit explain this Veblen effect again? So
Yes, a Veblen effect, a very good comparison would be like a Birkin luxury Hermes bag. What is fantastic about the Birkin secondary market is that it accrues in terms of value. It compounds on a yearly basis at a rate of around 14.5%. So if your
Mhm.
wife pushes you to buy a Birkin bag, it's not such a bad investment when you think about it, because of the value people put in the perception of what a Birkin bag is worth, because of the limitation which is put into place by the very smart marketing strategy of Hermes. So on the secondary market in the last couple of years, even on a 10-year scale, uh, the price appreciation on the secondary market of a Birkin bag was around 14.5%. Whereas if you take since January 2007, S&P 500, the compounded annual growth rate of the S&P 500 has been around 8%.
Mhm. Yeah, absolutely. So,
So as well, what I've talked about a lot, and that's why I was making a reference to Jacques Rueff, was the money illusion effect. Because if you look at the compounding rate of the S&P 500 and the compounding rate since January 2007, because I've used that, because I believe that the turning point really from the last couple of years has been the great financial crisis. Anyway, returning to the compounding rate of around 8%, if I take the growth of the United States debt,
mhm.
has been compounding at 8%. So net, the S&P is growing as fast as that of the United States. So in
Absolutely.
fact, it's a money illusion. So
Yeah.
right now, there was the big break, which was the great financial crisis, and the second big break, as far as I'm concerned, when it comes to the supporting flows of the U.S. dollar, has been the war between Russia and Ukraine. And they started seizing Russian assets, and
Mhm.
people started thinking, hang on, what's going to happen to my US dollar reserves if someone can decide that they don't like me from one day to the next and they decide they can take them? What's the point of having US dollar rather than having gold in my own safe in my country as reserves, rather than having US treasuries
Mhm.
uh, that can be seized from one day to the next?
Yeah, absolutely. And as we see, like the Chinese have been reducing their treasury holding, as the latest
Yes.
statistics are showing. And what you're mentioning, this I think I personally think that was one of the biggest mistakes the West has made with seizing the Russian reserve assets, and I think we still don't understand it here in Europe. If I talk to people from emerging markets, that's actually to change the whole trust in the whole Western world
Has broken
has
down, absolutely. And I think what the two greatest blunders, diplomatic blunders and geostrategic blunders that was ever made by the United States were two things. The first one was the weaponization of the US dollar.
Mhm.
Uh, and the second one was uh, seizing FX
The
reserve from a
reserves.
central bank, because these reserves are supposed to have like total immunity from an international legal perspective. They enjoy this kind of like superior defense, like
Mhm.
the United States unilaterally decided that, yeah, international rules don't apply. So when you start breaking down all international rules, the framework, then obviously it creates huge implications, second order effects, such as money flows. And right now, what we're seeing is the money flows, which traditionally have been going from the to the east to the west, because
Mhm.
people needed to recycle their US
The
dollar.
recycling of
Uh,
the dollars.
the flows have been
Yeah.
flying towards China. Now, what's quite interesting in the recent developments, people have been talking about the huge fall in the foreign direct investments (FDIs) in China, saying, "Look at China. China is in
Mhm.
deflation. Uh, China is real estate prices have crashed. Look at FDIs. No more investments into China." But when you look at the gradual shift which is happening under the radar, is that more and more countries are issuing, I would say, dim sum bonds. So they're issuing bonds in Chinese currency,
Mhm.
which means that the internationalization of the Chinese currency is taking place
Mhm.
on at a gradual space. It's not going to be instant, but when you see what's happening in terms of long-term trends, now you see China, they don't need FDIs anymore. In fact, China is investing abroad. In similar fashion, when you had the United States after the Second World War investing massively in Europe through the Marshall Plan. So we're seeing a very, very big shift. And at the same time, for the last 20 years, people had no, not the last 20 years, but yeah, I mean, for infrastructure investment, yes. But if I take the stock market, Chinese stock market, had been going nowhere for the last 10 years for a very simple reason. The investments had been going into infrastructure, not in the stock market. So now, if you look at the thousands of kilometers of high-speed rail in China, we're close to 50,000 kilometers of high-speed rail train. When you look at electrification, China has invested massively into the electrical grid. They've invested massively into nuclear. They're the number one investor when it comes to building nuclear plants, nuclear reactors. And as well, they've invested in a joint venture. We're talking about uranium. And we saw
Mhm.
that happen in the last couple of years. You and I have been talking about it. And these guys had been investing in a joint venture with Russia in one of the largest mine of uranium in
Mhm.
Kazakhstan. Kazakhstan is 44% of the world production of uranium. So these guys are playing the long game. They've been way advanced in securing the control of scarcity, the control of the premium material that comes into play to have like energy independence.
Mhm.
And if you look at the car market, in China, 50% of most of the cars which are sold for the Chinese consumer are electric.
No, it's very interesting. So, and you broaden really the focus. So I'm also quite, I'm managing some part of my own pension funds as well, um, and actually I have quite a big call on Chinese tech actually because I needed to build up the exposure like last year. So if you want to get a tech exposure, you can forget Europe. So we don't have any technologies or
No,
limited. So
but we
there
have
are,
very good regulations when it comes to water bottles.
yeah. So, but and then looking at the US, and I think that's a topic we can then discuss afterwards. Then really, some of the valuation are quite in lofty fields for some of the US tech
Yes,
companies. So, and we
absolutely.
see now a bit also there, and then. Even as some people consider China as more risky, so I had quite also personally quite some stake in Chinese tech, for my saving and pension fund. So no, it's very interesting. But you broaden also the geopolitical side of it. So I think it's also quite important is also commodity producing locations of the world. Like if you look the strengths of Brazil in all type of commodities, that they're
Absolutely. And I've in fact, I had given up on Vale a couple of years ago. I took a loss and I was way too early on Vale. But
Mhm,
now it's breaking out. Although Vale's performance last year was close to 90% in 2025,
mhm,
I decided, okay, the value is now, I think it's there. So I cashed in on a very good position I had, which I think for my readers like yourself, I was mentioning on numerous occasions that I was long EDAO strategic resources. So
mhm,
I cashed out on that. And I moved towards Valley for a simple reason. It's very cheap in terms of price earning. The yield is around 8.75%. And you're seeing commodities flying all over the place. And if you want, if you think about scarcity and that there's some, I would say, some kinds of reallocation, some kind of rotation from U.S. tech towards like a scarcity play. Valley makes it's very obvious for me. On top of that, you have to take into account the very restrictive monetary policy for the last 10 years in Brazil. You still have the Brazil central bank interest rates close to 15.5%, whereas the inflation is at 4.5.
Yeah.
So these guys, they're going to start cutting, I think, as of March. So what is it not to like when you have a central bank interest rate at 15.5, inflation 4.5, and you're one of the largest commodity players in the world? I think it ticks a lot of boxes for me.
Yeah, it's certainly a good environment, and at the same time, the US is also with um, also probably cutting more.
Yeah,
Or
and in
politically,
fact,
that's
I was
yeah.
comforted by my analysis when I heard that the maverick macro legend Stanley Druckenmiller has been as well playing the Brazilian play. So I don't feel alone on that. And
Hmm.
Stanley Druckenmiller is known for being a contrarian play and a very good player as well. So yes, I'm quite happy having jumped the boat again on some commodity plays on the Brazilian market, because I think that there's tremendous value there. Not only in fact in equities as well, in if you take the fixed income, when you have bonds trading at this level
Hmm.
because of the central rate policy, yeah, you might as well go long dated bonds on the Brazilian market, because your returns will be pretty good.
Hmm. No, no, absolutely. And we talk about commodities. I cannot leave out the Widowmaker trade, and you know which metal I'm talking about
Absolutely.
silver. So, and you've been also quite bullish on silver for a longer time, but now it's really we have seen an extreme volatility in that metal, and some people now considering even not investable anymore because the
No,
volatility is
but
too high.
yeah, what I mentioned was a classic Didier Sonnet from the ETH University,
Yeah,
who
yeah, it's
came
not
up
far from here.
exactly
So.
who came up with the Dragon King analogy and LPPL model dynamic
Mhm.
log periodic. The log periodic model to identify a bubble, and I talked about it in my recent publications about the fact that yes, early December we had the trigger of LPPL formation. So yes, obviously we had a very significant, very large standard deviation correction.
Mhm.
So that cleaned out a lot of leverage players in that sense. But the long-term dynamics of silver have not gone away. I will indicate that in in April 2018, I was lucky to get an invitation uh, from uh, from the CEO of Polymetal, which was one of the largest silver
Mhm.
miner in the world, as
Yeah.
well as gold miner, before they sold their assets back to Russian players, and they left the Russian market. Now they called Solidcore, and they've only kept their mining assets in Kazakhstan. But anyway, I was lucky to have a discussion with Vitaly Nissis, the
Mhm.
CEO of that company at the time, and I remember asking a very simple question about, well, what are your views on gold and silver? And he told me, on gold, I'm pretty agnostic, but on silver, I'm extremely bullish. And for the very simple reason, it's very scarce and there's not enough mining output out there. Now, it's a different animal when you talk about this mining, because if you have a copper mine, you have gold,
Mhm.
but you don't have silver.
Yeah.
Silver is silver, and you only have a very few locations where you have like big silver players. You can think about Mexico. There's always some place which I mentioned, such as Aya Gold and Silver, this Canadian company which is having some mining assets in Morocco, and
Mhm.
and they found some additional support in mining in Morocco. But there's huge, of course, industrial demand on silver, but if you just take into the historical ratio between gold and silver, on a very long trend, it used to be 15.
Mm-hmm.
In April last year, when the gold silver ratio was at 100, I said, guys, this is the biggest buy signal you can get. So buy with your both hands, load on it, because it's an anomaly. The gold silver ratio at 100 is just a buyer's market, and it was trading at 29. I didn't expect silver to go that fast, that radically fast upwards, like it did with the huge correction it had.
Mm-hmm.
Yes, it has retraced to 75. Now it's trading still around 80. I'm okay with that.
Yeah, okay.
I'm not a day trader. Uh, and I still think that, yeah, there's way more to go, for the simple reason that to build a operational mine, let it be silver, copper, whatever, it takes 15 years.
Mm-hmm. So
15 years.
you're not there like you would say, like, when sometimes silver peaks then it doesn't get back to the peak like for 20 years. So you still think that the story is still
Yeah,
on. So
but then of course you don't put all your eggs in the same basket. It's just like, I'm 100% silver. No, I'm
yeah, yeah.
not.
And you
It's
put,
part of the allocation process.
yeah,
It's part of getting a normal weighting into your portfolio,
yeah, and
depending
you
on your
also
level of bullishness, of course.
pulled out another rabbit, and which is Palladium, uh,
Yeah,
which I find interesting because I started to diversify now into platinum also with the pullback, and you pulled now Palladium also out of the hat. So, which was also interesting, and there you even highlighted that also the structural drivers
absolutely.
behind that. So,
Because the EV takeover in Europe is going to take longer. I'm not talking about China. China is electric now, but
mhm,
Europe, they don't have the infrastructure like the Chinese have. So they wanted to push everyone towards EV, electrical vehicle. They just do not have the infrastructure. Like France is still leading when it comes to nuclear power in Europe for sure, but they just don't have the chargers, the charging stations like they have in China. So I guess,
mhm,
for me, it's a very simple one. When I go out, if I take a Uber, for example, what is the guy is driving? He's driving a Toyota, and he's driving what kind of Toyota? He's driving a hybrid.
mhm,
Now, why is he driving a hybrid? Yeah, because he has the best of both worlds. He has the electric part, he has the fuel part. And how do you do the exhaust pipes on hybrid? Well, it's made of Palladium.
mhm,
So if you see that most of the Uber drivers are driving hybrid, and I think you see some players have already thrown in the towel, like Porsche. They are going to stop doing electrics,
mhm,
for sure. Even Rolls-Royce, they try to launch like the super expensive electric car. I don't know. Maybe in the long term, but right now, I mean, just about the European market, I don't see the value there.
mhm,
Whereas, if you see for emerging market, that's a different story. You see BID making huge progress, huge driving progress, in Latin America, and particularly Brazil.
mhm.
Most of the taxi drivers are driving BYD cars because they're so cheap. It's like the new Ford Model T in
It's
some
amazing.
essence.
It's also when I think about the German real estate market. So, and if so, when I was in Stuttgart, outside of Stuttgart, which it's the home of like Mercedes. So there was like in this retail outlet store a big show from BYD. I was saying, why are you guys allowing that here? In
Well, yeah.
so.
Renault has partnered with CATL for the batteries. They've
Mhm,
launched the new models, Renault 5 and others using Chinese batteries. The big issue, they look nice, these cars, but they're too
mhm,
expensive. I mean, who can afford right now? We're talking about the French, we'll talk about it, the French fiscal situation, the French overall picture. Who can afford forking out 30 to 35,000 euros for electric car, which has only, and I mean only, which can only cover 450 kilometers
Mm.
when the Chinese are beating down this number by a lot. So the market is is in such a way that yes, EV will take some place in the markets in Europe, but it's going to be a slower take up because of the fiscal situation than
Mhm.
in other countries.
No, no,
That's my
absolutely.
take. I might
Yeah.
be wrong on that, but that's my view on that. So that's why when I look at Palladium, which has been going nowhere for the last 5 years, platinum is becoming too expensive for the car
Mhm.
manufacturers. So what
Yeah.
you do when one of your key supply is becoming too expensive, you switch to the cheaper one, and the cheaper one
Absolutely,
being
the
Palladium.
substitution trade. Yeah.
So that's such a switch. Like, okay, platinum too expensive, I'm gonna use Palladium, that's
No,
good enough for
absolutely.
me.
That and and we will. And those readers who want to know more can also subscribe to your channel also to know more because you're describing it pretty well also with charts.
Yes.
So we don't want to give out everything here because that content is free. But I would still use the opportunity to ask you if I have really such a great credit guy like you here to ask about the credit situation. So we have seen in the FT yesterday, we have seen the blue wall.
Yes, we have these 2000 vibes again. Great.
Yeah.
Not that great, in fact, but yeah, no, it's true. That's why I always point out to history because, like Mark Twain says, like, history doesn't repeat itself, but it rhymes. And if I look at the current trades occurring in the U.S. credit markets, which historically have been associated with a credit cycle which is reaching maturity, you have a lot of pointers. First one, you
Mm,
have significant bond issuance. Look at what's happening in the AI space, in the investment grade. These guys are issuing like tons and tons of bonds. You have very low to very low spreads, very tight spreads. Just as a reminder, your 50% of your total return in credit, it's very basic. For the next 5 years is your initial spread.
mm. Which,
That's
how much? 50 or 15?
50%,
50.
50%.
50, yeah.
Because for the simple reason of carry and roll down, so just mechanical. So
Mhm,
the initial spread drives 50% of your total return over a 5-year course. So right now, when you have very, very tight spreads, your probability of making a significant total return is pretty low. Particularly in investment grades. As well, we've seen weakening of covenants. You have a lot of peak and peak toggle issuance in the high yield space.
mhm,
That's not a healthy sign at all. You have declining credit ratings. That's been a long-term trend as well. And another pointer, which for me is clearly a sign of a credit cycle which is reaching maturity, you have an increase in M&A activity and a large increase in LBO issuance to fund M&A activity,
mhm,
which means that you have less favorable use of proceeds from issuance to fund these kind of acquisitions. As a credit portfolio manager, recommendation I would made is like you need to dust your LBO screener because in
mhm,
some sectors the credit spread is going to blow out because of LBO activity, which is going to pick up for a very simple reason. A lot of very large LBO players are sitting on tons of dry powder, which we call cash, and
mhm,
they need to deploy their cash. So whenever they get the pressure from the investors telling them, "What are you doing with my money? You need to deploy it." Generally speaking, at the end of this credit cycle, people start doing stupid things.
mhm. Yeah, I know, I agree, and we both went through the GFC. What can
Absolutely.
so
We've seen the
w-
movie before, which means we're pretty old, and that's why
yeah,
we've lost a few hairs as well in the
no,
process.
no, and absolutely. So, and that's why uh, I think also can give some insights to some people who never saw a cycle in their life. So, yet,
Yes.
or like a substantial cycle. if we look at all the dip buyers nowadays.
Yes.
So it can also be different. So, and in real estate, we know it can be different because international real estate has been in a bear market now for 4 years. So,
Yes.
it has been quite a difficult time, and usually our subscribers are more in the real estate space. But it's very interesting to have your views on. And now I come to the nuclear question in the end. You as a Frenchman, certainly also following the evolution of the French politics, but not just the politics, the fiscal situation. So is there a way out in France? So
The markets and the fiscal situation are going to force the hand of the French government. There's no way to put it this way. And from a very macro perspective, what is the driver of the long end of the rate curve? There's only one driver. It is a similar rule for any kind of country, United States, Portugal, you name it. The long-term driver. Sorry, the long-term driver, yes, and as well the driver of the long-term rates, there's only one thing: fiscal policy. Fiscal situation drives
mhm.
the long end. That's why Portugal 10-year is trading tighter than France for a very simple reason. For the last 4 years, Portugal has been producing excess primary
Yeah,
surplus
yeah.
in their budget. France is the only country in the European Union which have not done any significant structural reforms. They are not spending properly. They're taxing like crazy, but on the spending side, they need to put the house in order. And until they do that, French long-term rates, the 10-year, will trade outside Portugal, outside even Italy, outside Spain, because you need to put your fiscal house in order if you want to have tighter long-term spreads.
Yeah.
You can play on a short hand. The ECB can help you, can support your yields, but the long end is out of your control, because the control of the long end depends on fiscal discipline. And that's why everyone has the buzzword fiscal dominance, particularly when we talk about the US, for example.
Mhm.
We've seen in many LATAM countries. That's why I said, guys, you need to brush your LATAM playbook, because some DMs are the new EMs. And as such, the only way to drive down the cost of funding on the long end of the curve is fiscal discipline. There's no way. There's no way. And 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 when talking about France, they've run out of option. They're already to the max when it comes to taxation. Yeah, they can increase whatever they want, but we've come to the point that it's like the Laffer curve. It's become
Mhm.
destructive. You are destroying value rather than supporting your economy at these taxation levels. So the problem does France doesn't have an income issue. Okay, it
Mhm.
has a spending issue.
Yeah, but I actually don't see a willingness to do
No,
anything
absolutely
against
not,
it.
because the entire system has been captured by a political class which are totally into the game for a simple reason. They all are like highly educated public servants, and
Mhm.
rather than serving the country, they serve their personal interest. And it's a game which is rigged, because if I take the United Kingdom, and that's what Charles Gave from GaveGal has been hammering out for many years
Mhm.
in public as well as privately, is that in the United Kingdom, if you want to have a political role, you have to resign as a public servant. So you put skin in the game. If you don't get elected, you don't get to return to your cushy, well-paid role within the public services. Whereas in France, as a highly paid public servant, if you take, for example, former French President François Hollande, he was a member of Cour des Comptes. He never had a real job in the private sector. So when he lost his mandate, no problem. He was returning immediately to some kind of public service office with
Mhm.
the cushy role, the very large pension, the very large salary. They never lose. These guys never lose. And regardless if they're right or left, the system has been entirely captured.
No, very well. So let's see how this will play out, and whether the ECB will be then more politicized as a first easier easier way to address without addressing the fundamental
Yeah, but
topic.
I think the only way would be for the ECB to put similar pressure they did put on Portugal, on Spain, on
Like on
Ireland,
Greece, yeah.
on Italy, telling guys, I'm sorry,
Mm.
I will not come to the rescue before you put your fiscal house in order. And the issue with France, unfortunately, is that it's the only country which hasn't done their homework in comparison to countries like Greece, Portugal, Spain. And it was very costly. It wasn't easy at all, or even for Ireland, for all these guys. They went through a lot of pain. But you can't delay these adjustments forever. You cannot. You cannot.
No,
Why on earth you have more public servants working at the Minister of Agriculture than people working in the agriculture sector? That's just an illustration of how crazy it has been going on. Like there's been a huge inflation of people working in public services when the sector itself has reduced drastically in France in the last 20 years. Yet, you still have now kind of more people working for the Minister of Agriculture than for the agricultural sector in France. Doesn't make sense. Why do we need more public servants than Germany for the same job? Doesn't make sense. So, yes, France needs to put its fiscal house into order, and until they do that, France will continue to borrow at higher rates than a country like Portugal in the long end of the curve, for sure. It's guaranteed.
well said. So it was a very interesting conversation. Thank you, Martin, for all your
You're
insight. I
welcome.
think we have flooded our subscribers with a lot of interesting thoughts. Also, I also learned quite a lot. And so we mentioned your Substack, which is then also provided in the description here in the video. And also, I will be sharing that also on my Substack, of course.
Thank you so much.
And if people want to use your expertise, so also not just to subscribe to your
Yeah, they
Substack,
can reach
is
out
there a way?
absolutely through my Substack. They can use a free subscription. They can as well contact me either through my Substack page or through LinkedIn. They can find me on LinkedIn quite easily, and they can reach out to me with great pleasure if they want to discuss specific topics about macroeconomics, about my views on and the trends I'm seeing, my long-term views, because I'm more a value long-term investor than a day trader.
No, absolutely. And if you liked this video also, please don't forget that to our subscriber to subscribe if you haven't, and also a like also helps the algo also that I can bring back Martin also for some future
Absolutely.
future updates on that, and we're keen, and we may live in interesting times,
We
as
do, we
the
do, we do.
Chinese proverb is saying, which is usually not a blessing, but it's certainly also, I think, it's important also the whole intellectual grasp what is happening, and not just following like trades or like on Twitter some of the crowd there. So thank you very much, Martin, and
Thanks for
see
having
you
me
again.
over. And it's always a pleasure to have a conversation and exchanges with you, Zoltan. And I also enjoy very much your publications on your Substack. As we say, like people, we're thinking alike.
Absolutely.